financial services company Capitec released their financial results today. For the 6 months ended the 31st of August 2023, the company reported making an operating profit before tax of 5.9 billion rand. That's up 6% on August 2022. Headline earnings per share came in at 4,072 cents. That's up 6% on the year prior, while shareholders will receive an interim dividend of 1,530 cents or 15.30 rand a share to be paid over in October, and that's up 9% on the year prior. Well, to take us behind the numbers, I'm joined by Gerrie Fourie. He's the CEO at Capitec. A very good afternoon, Gerrie. Thank you very much for joining us. So how would you characterize the period under review, the 6 months to the end of August, and are you satisfied with the report that you're giving the market today?
Yeah, I think overall, we're satisfied. I think we had a strong performance in the 6 months, given the economy. I think there's two sides of it. There's the transactional side that's done exceptionally well, growth of plus minus 20%, and then our value-added services, our Connect, our Capitec Pay, that come in very strongly, new products that's contributed 394 million to our bottom line. We've rebranded the business bank, and we're making certain that we can scale and launch that early next year. And then our insurance license and our insurance systems that brought in. Then you sit with the credit impairments, that's up 62%. But like I explained, I think that's in line with what we've seen the market has reported. But we're starting to see green shoots. We've really pulled back on the credit side. We've focused on collections, and we're starting seeing the results. So I think overall we're pleased with the results.
So I see that your net interest income was up 17%. It's just under 8 billion rand, and your net loan fee income was also up 14% compared to the previous period. What were the drivers of these increases? And clearly the higher interest rate environment has obviously served you guys well.
Yeah, I think the higher interest rates where interest rates went up with 2.75, that had a positive effect. But then you must remember, business banking had last year a book of 13 billion. That book is now 16 billion. So we had very strong on the business banking side. That has actually contributed to that 17% growth.
Tell us about the insurance business that you got into, the funeral insurance. You touched on it earlier as you were speaking to the first question. How is that going? Because you established that a few years ago. Have you seen significant growth there?
Yeah, I think what we must understand is we've been providing credit life for 10, 12 years, but on a self-captive with guard risk. And then about 6, 7 years ago, we had a partnership and still in partnership with Sanlam, also on a self-captive. Regulatory environment has changed, and we had to open up our own license. So we started with that process about 18 months ago. So we're going to write policies onto our own license. We've got a license for long-term insurance. So that's what we're focusing on. Guard risk, we're in process. Like I said, credit life, we've written 255 policies. And the whole Section 50 will be completed by middle of next year. And then we will write everything or bring over all the old policies. And we're in negotiations with Sanlam. And depending on how that goes, we will then bring over the funeral book in appropriate time.
You talked about new business initiatives bringing you in something in the order of just under 400 million rand. Why are you investing this year? Where do you see scope for growth for Capitec?
Well, if I look at the business banking side, there's a lot of scope in that particular area, especially next year. And then if you look at the value-added services that we've launched, then there's a lot of scope that can come through there. There's new products that we are working on. And then insurers got new products that we're working on. And then it's optimizing the 21 million clients. I think it's quite a powerful position to be in, to have 21 million clients, and we can see it. If we launch a product that creates value for the clients, then we see a massive take-up. And that for us is a very big plus.
So I just seek a little bit of commentary from you around what's happening in the broader economy. We know that there are issues in terms of the public finances. To what extent does this affect banks like yourself? Because we hear that South African government bond yields are going up through 12.5%. How does this affect you in terms of being able to source money to then lend on to your consumers?
Yeah, we luckily have got a very strong capital base. We've got a very strong growth in our deposits and our fixed term deposits. We've got a capital adequacy of 37%. So we're not dependent on government money or to get resources. Wholesale funding is extremely small in our case. So it hasn't got a direct impact. I think the impact is more on the country in overall, and that impact on the economy and how do you grow the economy? Because for us, I think for business to really grow, we need to have 3-4% GDP growth, and we're very far from it. And I think that is where government and the private sector must work together to say how do we actually can get and grow this country of ours.